Hello friends, welcome once again. This is CA Rajiv Khatlawala, author of How to Profit from Technical Analysis. And today, being a Sunday, I thought let us discuss something different. As I was sitting on my desk, exactly in front of me, I have so many books which I've purchased over the last so many years. And some of the books which I have are relating to finance, relating to investments. I also have books on fiction and non-fiction. And since I started, the investing journey almost 30 years back, I have been collecting, I have been buying a lot of books. And whether the book is of an Indian author or a foreign author doesn't matter. In fact, when I started investing 30 years back, most of the books which we have, I think 95% of the books which we had that time was, by a foreign author. And I think a lot of interesting books were available even in those days. And generally, I have seen that, the writings of those times are as much applicable to the current situation also. This is one book which I have purchased, I think probably more than 25 years back. It is called Stock Market Rules, and it is written by Michael Shimo. And being an author myself, I read a lot. It is always better. I would also request or suggest to all new investors, especially, that if you want to become a long term, you want to remain in this field of investment and trading, it is always better that you can use at least some hours in a week to read a lot about the markets, about the about investments, about trading. Just read a lot of books as far as possible. It will help you to grow and increase your knowledge, upgrade your knowledge in this field. As I always say to my participants, that there is always something new to learn always. On this background, friends, let me, there would be many stock market rules. I'm aware that you also are aware that there are a lot many stock market rules. But I have selected from this book. This book contains almost 40 stock market rules, and from them I have selected around three or four to give you an idea as to how the old wisdom is as applicable today also. Just let me share the screen first, and then we will discuss those specific rules. Here we are now. What you are seeing on your screen is my PPT. There is a PowerPoint presentation which I have. Now, the image which you are observing here is stock market rules. As you can see, it is containing around 40 rules of stock market investing. And on the background also, you are seeing some few books relating to investments. Of course, this is my own book, How to Profit from Technical Analysis. Then you have Value Investing Made Easy, Investment Fable. This is a very interesting book for those of you who want to understand advanced fundamental analysis. This is quite an interesting book, Investment Fables, and so on. So now let us start this particular different topic today. I'll start with one small saying, which I always say, that the more things change, the more they remain the same. As I said, old wisdom, this book probably, stock market rule, would have been written probably 25, 30 years back. I would have purchased at that time. But those, learnings are still valid today. And I'm sure they will be valid even 30 years from now. The more the things change, the more they will remain. Normally, they will remain the same. The basic rules, the basic structure will always be the same. On this background, let us see the first rule which I thought, out of the 40 rules in the book, And probably there are more rules elsewhere. Recently, as you all know, movies or web series like Scam 92 has introduced to the new investors so many quotations and sayings and rules about the market. So out of them, choosing the best three or four is very difficult task. So but I have tried to do that here. So the first rule I thought that it is very interesting, and as a person who is an investor for the longer term, you are going to remain in this market for a long time, not 5 years, 10 years, but 20 years, 30 years from now. This specific rule will help you. The rule is buy when there is blood on the streets. Now, don't take that literally. It is when we say blood on the streets, it means that when there is a huge panic. And I'm sure, friends, that last year we saw such a scenario where there was, as we say, blood on the streets. When the COVID crash came, the markets, the index, the Nifty fell almost from the 12,000 level, it fell to 7,500 level. And that was a huge crash. Many of the stocks were, available at very, very cheap prices. And that was the time, historical wisdom says that these are the times when you should buy. And I am sure, I know that I know personally many of my friends, my fellow investors, who have bought heavily in this market in the last crash, and they have got phenomenal returns. Now I'm sure that those of you who have been in this market for some time, obviously you would have taken advantage. But the new people here, new investors here, remember this: in the coming years, maybe not immediately, but after 1 year, 2 years, 5 years, there will be situations where you will have these sort of panics. And remember this rule, this ancient wisdom, that it is always profitable to buy when there is blood on the streets. So I'm sure you will remember this rule. So now let us go to the second rule, very interesting second rule, and that is especially applicable in this current market: follow a few stocks well. So there is a tendency among us that you want to buy everything. So you'll buy 50 shares of this, 500 shares of this, 25 shares of this another stock, and so on. It is always better. Historical wisdom says, even there are many investors whom I know who have built long-term portfolios, and I have gained one very interesting insight from them. I have learned from them is that there are so many investors, long-term investors, who are following only specific few stocks. A typical investor, a general investor like us, usually will have in our demat account, we will have probably 50 or 70 stocks. But good investors, investors who have been in the market for a long time, if you see their demat account, if you see their demat statement, you will observe, you will find that they have approximately 15 to 20 stocks only, or a majority of their amount invested is only in some few stocks, and they are following these stocks, these companies very closely. Whatever is happening in those companies, they will follow very closely. And historical wisdom says that if you want to make long term wealth, this is what is the correct approach. Of course, nowadays we are more into trading, but those of you who are trading actively today, I would also request that keep a part of your total investment portfolio for long-term investing, and follow a few stocks well. It will help you to generate wealth over the next few years. So this is a very interesting second rule. And now let us go to the third rule, and that is buying on weakness and selling on strength. Friends, I think buying on weakness, many of us probably might be doing. But one thing which we do not do is when the price is I mean, when the stock price is rising, it is very strong, it is in a strong bullish market, uh, we do not sell on the strength. So it is always better. Now this historical wisdom also tells us there is one more stock market rule which I have not mentioned here, which is available in this book, is that partial profit booking is always good for your portfolio. So let us say you have bought some stock at let us say 100 rupees, and the stock price has now steadily risen, and in a very short period of time, now your that script has gone beyond 200, 250, etc. Let us take an example of Tata Motors. So probably you have bought at much lower levels, and now the price has tripled. So now what would you do? Most of the investors would want to hold on. Yes, it is good. You can hold on. If you are a longer term investor, you may still hold on for another few quarters. But it is always better. What this says is that sell on strength. So when you are at a peak, when you are at a high, and you have good comfortable returns, it is better to at least book partial profits. You may have bought some some number of shares, you may exit half of the quantity, that is also fine, but it is necessary to sell on strength. Usually in the current bullish market scenario, what people generally end up doing is, at the market peak or at a stock's peak, they will actually buy rather than sell. So usually one should avoid that, and that is what the rule says. And that brings us to the another rule, which is very important, and that is follow the smart money. The word smart I have used here, that is why it is in the italics. So follow the money is a very old stock market rule, and it says that wherever the smart money is going, that is the direction that we also must go. Now obviously you can't know, just by reading newspapers, etc., you can't know where the smart money is going. And for that I use, I take this opportunity to tell you that price analysis or technical analysis of stock prices is one very interesting science, one very interesting study, which helps you to know where the smart money is going. And those of you who are already aware of price analysis, you would be knowing that whenever we get a buy signal or a sell signal, it tells us where the smart money, where the key investors are, whether where they are investing, whether they are buying, whether they are selling, and so on. So follow this rule, very important. And those of you who watching this video, who are not aware of the science of price analysis, I would request you, friends, that at least get some basic idea about the science, and it will help you a lot. So I think these were the four rules which I jotted down as I was reading this, rereading this book again. And as I say, there are many rules on stock markets. As I said, there are many quotations, many sayings, and the key is, key to success in the stock market is to follow these rules. Knowing is one part, but following is another. And even though you are knowing many things, many a times you end up doing the reverse. So it is better, it is always important to follow the rules. So friends, I hope you have thought this is an interesting topic which I took today. And I hope it will add value to your overall investment journey. If you have liked this video, please do share with your friends and tell them to subscribe to this channel. I'll be bringing out so many other such many such topics. And as always, I also bring out various technical topics during the week also. So thank you very much, and have a very nice Sunday. Thank you very much. This is CA Rajiv Khatlawala signing off. Thank you.